Hi, everybody. This is RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. And it is Saturday, December 8th. And this is my market situation report. And I've got a question that I started talking about last week, and it bears repeating with more detail. I love using historic information to prove a point because oftentimes us humans want to kind of move back to or look back to or lean back on our emotions for the answer. So the question I want to ask this week to you and to us and to everyone is, do your circumstances define you? Do the circumstances you live in define what your income is going to be or how your money is going to grow or not grow? And so the question is, do circumstances matter? Now, just in case you don't know the definition, I always like looking up definitions of words because I think we forget what they mean. The definition of circumstance is it's a fact attending an event. Or a fact that attends an event. It's a fact having bearing on an event, and it's details surrounding an event, and it's the narrative of an event. So there's a narrative going on right now in the news media, the print media, the TV media, the radio media, and the narrative of this event, and this event right now happens to be the Fiscal Cliff, and the narrative is, oh my gosh, what's going to happen? What's going to happen? So what I want to talk about is, do these circumstances matter? Do events really matter? And so let's go back into the way back time machine and let's look at some events and some circumstances in the past 50 years and let's see if they matter. Now, the first one I want you to look at is the Kennedy assassination. Now, if you look at this screen, let me get out a little red pen here. You might say, oh, yeah, RC, I know where the assassination is. The assassination's here, or, maybe it's there, or maybe it's there, or maybe it's there, or I don't know. I guess it could be there, but you know what? It probably really is here. And if you noticed, I pulled the date. I pulled the dates off this price chart because, I don't know. So let's see if the Kennedy assassination, let's see what it did for the overall direction that the market was going before and after. So here's the direction of the market. Here is the Kennedy assassination. And this is what the market did after that event. Okay, let's go to our next one. We go from 1963 all the way to 1987, Black Tuesday. Now, it may be easier for you to see where the event possibly could be, so I'm not going to take out my marker, but let's see what the market was doing before this event. Okay, the market was going up. In fact, it was going up for 5 years before this event. Then we had this huge 23% loss. Okay, moved back up, and the market went back up. So notice that the market was higher after the event than before the event. So the event happened, the circumstances happened, but the overall trend never changed direction. So let's keep going. This time, let's look at September 11th. Again, I want to get my marker out because the question is, where is September 11th? Is this September 11th right here? Is this September 11th right here? Is this September 11th right here? It's hard to tell, isn't it? So let's go ahead and see where this event of September 11th happened. So the market was falling, had been falling since March of 2000. Then we had September 11th. Then the market corrected back, and then it kept going in the same direction that it was going. So do circumstances matter? And then we go get in the Wayback Machine and go quite closer to where we are today, and we visit the largest bankruptcy in U.S. history. And I won't get my magic marker out for this one. But let's see what the largest bankruptcy in U.S. history did to the direction of the stock market. So it started falling, and it had been falling since October of 2007. That arrow ends in about September 2009. We have the bankruptcy of a company called Lehman Brothers, which was over a $600 billion bankruptcy, largest in U.S. history. Market came back up, and the market continued in the direction it was going. So do events matter? Does the narrative of the event matter? Do the facts of the event matter? Do events even matter? And then we move forward to last year, to something called the debt ceiling. And, maybe I should pull out my magic marker and say, where is the debt? Is this the debt ceiling right here? Is this the debt ceiling right here? Maybe the debt ceiling's back here and I'm just sneaking one over on you. Where's the debt ceiling? But let's see what happens here. The market's going up, was going up since March 6th, 2009. Debt ceiling conversation hits, the market falls, the market goes back up, and the market goes continuing up in the direction it was. So do events matter? Do circumstances matter? And then you have the fiscal cliff. Now, I kept the date on here because we are looking at a present price chart of the S&P 500, and this is the direction that the stock market is going right now. And so the question you have to ask is, yes, I know the narrative of the day is all around the fiscal cliff, and the event that's coming up is the fiscal cliff, and the facts are that there's this thing called the fiscal cliff coming up, but does it really matter? Do circumstances have to define your future and your retirement and your security and your freedom? So do circumstances define you? Do circumstances define you? Do they matter? Do circumstances matter? And my answer is no, they don't. And history says that they don't have to either. But your strategy does matter. So the question is, what is your strategy? Because events do not matter. Narrative does not matter. I don't think circumstance matters. It does not matter, I think, when you were born. But what does matter is the strategy you're using. And I trust and like my stockbroker is a strategy that died in the year 2000. So what we do at Fearless Wealth is we follow strategies. And if you followed me from any given amount of time, you know that it's all about the strategy. Pick a strategy, don't pick a stock. So guys, we have one more monthly strategy gathering coming up. And this week's market situation report is for you to really reflect on yourself and ask yourself, what is defining your future, your circumstances or your strategy? And I'm saying it's your strategy, and look at your strategy. So we're going to be meeting this Tuesday. It's going to be the last meeting of the year on December 11th. You can log on online, or it'll be at in Silicon Valley, where I live, at the Hotel Sofitel. And we're going to do an updated view on stocks, bonds, commodities. That was currencies, commodities, precious metals, real estate. We'll do, of course, the speed investing, which everybody loves, and we'll have an extensive Q&A period, which is important because we're going to be talking about taking gains this year, getting your tax gains or your capital gains done in 2012. And we're going to talk specifically about why to do that and how to do that and why it can probably save you thousands or tens of thousands of dollars. So that's going to be a pretty important part to the conversation for our December 11th monthly strategy gathering. I'm so glad you guys were here, and I look forward to speaking with you at the gathering. And if you're not there, at the next situation report. You guys take care, and I'll speak to you then.